Hello everyone, this is Drew from Best of Us Investors working with Mark on the Platinum Trading platform. As you may know if you have been a subscriber on the channel for some time now, Mark, who has been successfully investing for over 40 years and warned us to get out of the market in 2021 November when the market was at its peak, is now helping our subscribers on swing trades, analyzing more than 1,000 companies each week based on 10 indicators and sharing the tickers of the stocks that are set up for good uptrends every day, along with weekly Zoom calls for Q&As with the members. So if you might be interested in our service, please make sure you check the link in the description below. So today I wanted to share two stocks that went down dramatically last week, but if you were to follow our guidelines regarding trading and checked each indicator that Mark educates, you would have been able to get yourself out of the stocks before they plummeted. So let's get right into the first stock that Mark has gone through in our Platinum Zoom call.
So this is at SMCI. This is a super microcomputer. Okay, and we've looked at this before, and we talked about it on Monday in a video. But you can see it's been crazy up, since the AI craze has come on. But lately, it's done like everything else, and we've seen a little bit of a dumpster fire happen here. So when I was looking at this chart, so when would I possibly get in or out of this chart? Just using our trading system. So if we were swing trading SMCI, and I didn't do it, and it's easy to go back, but I just wanted to show you, following the rules, kind of what help you get in and out of these, even if you're kind of an investor kind of guy. I'm going to take these off so we just don't. So when I look at it right here, we had earnings, so we would have not been in there before earnings. But the day after earnings, we had this nice bounce, a full candle close above the 9. We're above the 200. You can see that the MACD crossed over positively at this point, made an RSI jump up, made a stochastic jump up. So at this point, this is where, based on the trading rules and guidelines I have, you would have gotten in, and you would have gotten in at 133.95 right here. And you would ride this up. It never did get a full candle close below the 9. Ride it up, didn't get a close here, all the way to this point where it closed right at or below the 9, and where you would have probably got out here the next day. And that was at 243.92. So at this point, your gain was $109.97 a share from here to here. So now you're out. So you missed this little ride down. And then you see you're above, you come up and you're above the 9 again. But why wouldn't I have gotten into this at this point? Because I don't have confirmation on the MACD. We're still below on the MACD. Okay, we have a positive showing in the stochastic, which kind of gives us an indication the MACD is going to go up. But if you're going to really want confirmation, this is the point you would do it. So you wait, and at this point right here, the MACD starts to cross over. And at this point, you could get back in. You're over the 9, you're over the 50. You got a MACD crossover. You're still good on the RSI. And you ride this all the way up. You never did get a full candle close below the 9. Oh, I guess that's still touched. Okay, so you want to be a purist and that touches and you're not full candle close below. You could have got out at this point, which would have been 321.21. You would have got in at 250.53. But if we went up here and we said we're getting out before earnings, and this little guy should be there, you get out before earnings, and that's at 353.29. You got in at 250.53. So I mean that gives you another nice profit. And then from that point, earnings came out. And then you dump down and you're below everything, and you still wouldn't be into this position yet. You're still looking at the MACD, which was positive here, and now it's negative, starting to roll a little bit. It's still not enough to get you back in. So people who stayed in, they might have wrote it up or bought it up here and don't watch charts. They might be long-term investors, but now they're down, and now we're going to lose some opportunity cost. I don't know when this will get back up to this level or if it even will. And that's why we swing trade.
So as we just saw, if we follow the indicators and not just the hype of the stock, on our first trade with SMCI, we would have made approximately $110 per share. And then after the slight pullback, we could have got back in based on the indicators and got back out with another $100 per share in profits. So again, for swing trading, it is very important that you follow the indicators and exclude your emotions out and follow your guidelines as we just saw in the SMCA stock case. Now let's take a look at our second stock.
Just looking back here in May, here we closed above basically the 9-day right here. But again, we go down and we don't have confirmation that we closed on the MACD above the MACD. The next day, we still are below on the MACD. And then on this day here, the MACD finally crossed over the signal line. And that's where you probably would have gotten in. If you're following the trading plan, you're above the 9, you're above the 50, they're trending up. you're above the 200. You got a MACD that's now crossed over. You got an RSI above 50. You got a nice stochastic going. You ride this thing above the 9 until you get one candle close. So we got in down here on Apple, 177.25. We sold at 187.14. And we didn't get back in. You see that we're above the 9 over here, but let's just say right here, we go down, we're still below on the MACD, below on the MACD, below on the MACD. We never did cross over the MACD, over the signal line at all. So we would not have gotten back in this trade. And then if had we been in there, we would have got out before earnings, and you see what happened. So we would still, as swing traders, based on the trading plan that I use, not have been back in Apple at this point. You can see right here, right before earnings, that's when the MACD crossed below the signal line. You see everything fell apart right at earnings. So again, there's power in this. When you might have bought in up here and now you're down here, that's a lost opportunity cost, and you're going to either have to get out or suffer more downturn. And then we're having a little bit of an up day today, but we're still below the 9. We're still heading down in a trend. We're starting to roll a little bit. But again, you could have saved yourself this much of pain just by watching charts and by watching numbers.
Now, as you saw in the Apple stock case, not only would we have made money on the swing trades if we followed the guidelines, but we would have been able to get out of the stock as it plummeted under the 9 SMA and prevented ourselves from the huge loss that we saw last week. Now, the indicators won't be correct 100% all the time, but at least this gives us a good idea how we may be able to prevent ourselves from these downtrends before it happens. And even if the stock rebounds, I think it is much better to take our profits and wait on the sideline to see how the stock does, rather than being stuck in that trade with a huge loss. So with that, if you're interested in these swing trade updates, daily ticker suggestions, educational content, and live Q&A with Mark on a weekly basis, make sure you join the Platinum member in the description below so that we can make it through this tough market together. I'm looking forward to see you on our next Zoom call, and thank you very much for listening.